Let's talk some commodities. Joining Scott Bauer, the CEO of Prosper Trading Academy. Talk a little crude and some gold. Let's get crude out of the way, Scott, because I don't think it's quite as exciting. But rejected from 40 bucks, does it open up more downside? Are we in a downtrend in crude now?
You know, I think we have been, for the longest time here. We spoke, it was about a week and a half, 2 weeks ago, Oliver, when we were trading. Last time it was trading down around 36. And I said, look for a short-term bounce here. And we got that bounce. And now, it's still a matter of demand. And with all the news coming out now about COVID spreading again and the new restrictions in New York, this, that, and the other, that demand, it really is demand destruction. That is what's weighing on the crude space here. Technically also something that I'm not sure that people have really pointed out yet today, Brent, and I know we're looking at West Texas, but Brent actually dipped below the 100-day moving average today. So technically that could have put a little acceleration to the downside there.
3.7%, not good for Brent. Natty gas getting killed too. So Scott, do you just steer clear of the energy space as a whole? Should we read into it that there's not going to be demand for anything?
I don't know if you steer clear of it, but that is certainly the continued weakness. I mean, it really is a matter of demand. It's not a matter of supply. And even there were some stories coming out today also that with the OPEC cuts that are going to be up for discussion again in January, that they may take that back off the table, and that's still not helping crude. So it's pretty ugly out there, but the range is very well defined, Oliver. It's really 35.5, 36 to 40, but I would, have a bias on the sell side on any rally.
Okay. Bias on the sell side. I know where your bias has been on the gold side, which has been on the buy side. So you're getting a little bit of a bounce here, Scott. What's important for you on the chart of gold? What's important for you on levels to make us feel more comfortable after the downtrend of the last month and a half?
Yeah, closing above 1900 today psychologically is important. It's not really an important technical level. It's the first time that's closed above there in over a week, but really it still continues to trade with dollar strength or dollar weakness. And that 94 level on the dollar seemed to be kind of the pivot point. So when we rallied above that last week and it sustained above there, that's when we saw gold really get hit. The last couple days, we've now seen the dollar get weaker, actually trade below 94 there. So that's really what we're seeing, there as well. However, for the short run here, I'm talking very, very short run, I think we're range bound in gold, but I'd be biased on the long side, the bullish side, unlike in oil. As we get closer and closer to the election, though, going out another 4 to 5 weeks or so, I think gold rallies, and I think in gold futures probably get back up to 1950-ish. And if someone's watching the GLD at all, probably above that 180 level, maybe towards 182, 183. Okay,
so for GLD, the ETF, appreciate the incorporation there, Scott, for those trading that. Basically, they both found that support roughly around the low 180s for the ETF, and then for gold, the mid 1900s, right? I mean, you're looking at basically kind of the same place that served as a floor for a couple months when it was gyrating. And from what I've learned here from the technicians, that becomes an important area to think about on the way back up, right? Because you look at the same spot, that same kind of pivot point, just coming at it from a different direction.
No doubt about it. And that's why I said about, 1950 to the way up there, and that, mid 180s or so on GLD. I think it's very important, though, because as we get closer and closer to the election, especially if, and I don't want to paint this as a bleak picture, but especially if the COVID situation doesn't get better, I think we will start seeing a lot more interest in gold as that safe haven, which, again, it's been trading really lockstep inversely with the dollar over the last few months. I think now it may be perceived as that safe haven.
Okay, so you're kind of making a case here that potentially short to intermediate term, gold could be a little bit more range bound, doesn't have to keep breaking new levels. We heard the case at the top of the show from a first guest that the market itself could maybe find a degree of equilibrium here. Do you think, Scott, that calm and tranquility like today is sustainable with so much at stake here?
So the market overall hates uncertainty. Regardless of the situation, they hate uncertainty. I think we're going to get some clarity after the debate tonight. Whether that clarity, whichever side that's on, to me is irrelevant. I do think we get some clarity after tonight, which could bring in a little bit more complacency or just a little bit more normalcy to the market, at least over the short run here.
Okay, so we'll be watching some of the numbers, right? The markets, predicted stuff like that, see if there's any big changes to probabilities of each candidate, then see if there's any specific stuff in the market that changes. Maybe we'll have some ties to bring together. Maybe not, but maybe. At least it's, first step. All right.
It's certainly a dynamic marketplace, and the volatility is here at least for the next 6 weeks.
Okay. Appreciate it, Scott Bauer, CEO of Prosper Trading Academy, with the thoughts here on gold.